Join in. Join in tukiwa watu wengi. Tuanze. How are you doing? Merry Christmas, Happy New Year. Hope you're doing fantastic. Mko poa? Mko poa pia? Yes, I'm doing good. So, tuanzeni. Tumefika ngapi? I need my other phone. Bro, DK. Hope mnaendelea poa. Sinidi kusema pole, hata nyinyi mnajua tumekuwa sherehe, so patikana na imekuwa ngumu. I've really tried even to come today, like nimejaribu. Hii wiki ya kwanza watu wa working class akirudini job, you people are bad influence to us. Okay. Nimenilemea hizi sherehe zimenilemea. Anyway, hope kuona na mfike namba kubwa. So last time tulicover up double top, so nita set up kidogo. Nini ingine? Kwa nisema mna hold boom 1000 kama una sell, hiyo ni double top. Sure trade itakupea 250 USD. 250 USD ukiconvert saa hizi na Kenyan inakulipa around that what? 250 inakulipa around inakulipa almost 40. Yes. Inakulipa almost 40,000. If 250 it depend na banks wenye watakuchangia, but penye dola iko haishuki anytime soon, so I think itakupea haitafika 40, around 38,000. Ati lebo imekaribu macho pana. Which pair? Boom 1000. Use kama una sell boom 1000 right now. If you don't have it, just sell it. Hizo ni pesa za bure. We talked about a double top last week, and that is what the market is forming right now. We're gonna do a recap of whatever we are learned, and then ingililia double bottom. I think saizi sauti yangu imerudi. I haven't been drinking that much. See kama last week walaizi kwa naiza hata kuongea. So I want us to wear 30. We are remaining like 10 more people. I start. But kama kuna swali niuliza hapo. So, na muendelee kuhold step index. Step index iko na double top, haijaimaliza. Hold V75. V75 is supposed to pay you $1,000. If uliingia na 0.0, nilipeana 0.005. If uko bado na V75, just hold it. I think tuko profit kubwa saizi. If I check, I will check with my other phone. This one natumia. Let me see. I have a bit of some charts hapa. Hebu nione kidogo tu. Chaniona V75 iko profit ya nini? Juu trades zote tuko nazo, V75 iko profit ya $250. The only trade haijaingia profit ni boom 1000. And niko na swali, at least I'm not late. Karibu. Step index bado inaanguka. It has a double top, so it has to drop completely. That's why I'm very patient nayo hata ikishinda ikisumbua. Which other trade inasumbua? V10 tu itarudi itashuka. Hata V75 ni yenyewe ilikuwa inatusumbua before. Sasa hizi iko 250. Hizi zenyewe trades kuna nazo, let me even show you. These are the trades we have. These ones. Yeah, we have these trades. I think this is step index. This is step index. This is step index. This is V75. So V75 coming all the way through. Iko hivi. Trade yenye tu haiko profit ni moja. Na hizi ni zenye trades zenye nimepeana. Step index iko hivi. Acha nitale. Hii account nailea na fujo. Na place nataka kuwekea boom tena. Nataka kuisell na nini kubwa. Nataka kuiuza na lot kubwa. Nipe pesa mingi. Boom 1000. Kuna kitu nilikuwa nataka wa confirm na naona washa confirm. Tuko pamoja hadi hapo. How do I get your indices? Indices. Go look for indices. I think we have 57. That's a good number for me to start. Go look at indices. Indices is ukiingia kule kwa add a new chart. Kuna forex, kuna indices, kuna metals. Angalia kwa indices. Utazipata kwa indices. Be it, but you have to lazima kume login. Kama meta 5 yenye ume login. Lazima utafute indices. Indices utaipata hapo dollar index. Let me go to, I think the number is enough so that I can start. So we're going to have a recap of what we learned last time. Kidogo tu, I need to do something. Background yangu ime makelele. So, leo nataka kutumia key. So last time, I just want to give a short recap. We talked about a double top our two position here and here. This is our resistance. We call the upper side the resistance. Remember? I just want to do a recap of the double top so that we can go to the double bottom. Itakuwa rahisi. A double top is a market imefika two position. It was unable to break the previous high. The market, this area, let me do this. This area was unable to break the previous high. The previous high is this position. So the market was unable to break this position, forming a double top. This is what we call a double top. Where the market is unable to break the previous high. So you put a line on the top side. When you took a line on the upper side, we call it the resistance. And we say the market drop. And from the first top, this is our first top. So we say it dropped up to this area and it forms what? At this area. What is formed? It's called a neckline. A neckline in penye market, itashuka. It's unable to break, to move back down and goes back up. We call that one a neckline. This area, we call it a neckline. Let me see if I will be able to text anything. Nah. So this area, this area, we call it a neckline. Let me even write. It's called a neckline. Oh my God. Say neck. We call it a neckline at that area. So we said the market, you're supposed to sell it. Looking for something. Looking for this. So we said this is our first top. The market comes to the neckline. This area is what we call the neckline. You place a line here. So the market goes up. I said usually trade this area, the last side. This is the area we trade. You sell from this area, take profit up to here. You sell from here, take profit up to here. This is what we have with Boom 1000. Let me show you. And the same thing. I will show you what step index has. We have our Boom 1000. I want to show you. Boom 1000, we had the double top. Our market got up to this area. It was unable to break. It went back down. This is our neckline because our market originated huku chini. So then went back up to the resistance. It was unable to break. And then what did the market form? Reversal candlesticks. It has a hammer, it has an evening star, it has hammer, spinning top, it has formed reversal candlestick. So you sell it, you sell it up to here, take profit to the neckline. Our neckline is here, where the market went from our second top. So you sell it from here, take profit. You see the take profit there. The take profit is the take profit up to the neckline. It's 52 to 50. That is. So I've said, if you don't have this trade, trade it. Okay, we are together up to there. You trade it up to there, to the neckline. If the market breaks, now this is our first trade. You sell it from here to the neckline. Simple. Now this is the real thing. Huh? You sell it from there. The same thing we have on the drawing. You sell it from here to the neckline. When the market breaks, it usually does a retest and goes back to wherever this market originated from. Let me show you. You see? If the market originated from here, the market will go back to that distance. Together, up to there. Now, if the market doesn't do this small retest, it does something I explained last time. It goes halfway of this distance. Halfway. From here up to here. Let's take a line. This line. Huh? It goes halfway. You measure the distance. This distance. You measure the halfway. Like halfway of the line. Huh? It comes, get to, sorry. It gets to this point, huh? The halfway. You measure this up to here, the half of it, and then it goes back and does a retest in the market drop. This is what, let me show you which market did this. Step index did exactly the same thing. Where is step index? Here. You see? We had a double top on top hapa. We had a double top here. Our market didn't do a retest. What did it do? It went halfway. Let me measure from there up to here. Now, I want us to measure. I want to show you realistic things. Trading is very, very easy. If you know small tricks, very small tricks, the market does. So I need it from there. Yeah, from the up to the lowest. The lowest position we have for the market is here, where the wick is here. So it went halfway. Like if you check this market from if you check this, the whole line, our center is here on the dot. Can you check where the market got up to? And then what did the market do? Because it never did a retest. It went back up to do a retest. Then dropped. So it's supposed to come up to this area. I think that's it on a double top. I've explained. There are 3 trades you can get. 1, when the market has those 2 double top, you trade the last top. When the market breaks, you wait for it to do a retest. If it doesn't do a retest and it breaks and proceeds down, chances are, and this happened both in forex and volatility, it's gonna get to halfway of the first trend of the you have gotten up, then goes back up to do a retest and then goes down. Simple. Double top, those are the 3 secrets. And another secret is those are the 3 patterns double top forms. And another thing is the time frame. I said you have to check on the time frame that double top is formed with. If it is formed by 4 hours, you're gonna use to trade it with 4 hours. It is formed by daytime frame, you use daytime frame breakout. You wait for a whole day to end, you see the market if it's going to break the neckline or not. When it comes to breaking the neckline, you have to check which time frame has formed the double top. If it has been formed by 6 hours, 8 hours, let's just be simple. Let's use day, 12 hours, 4 hours, 6 hours and 8 hours. Let me use those ones. You have to check the double top. Oh, sorry. Imeformiwa na time frame gani? Imenyongwa. Wow. You have to check the time frame which the double top has been formed now. So we go ahead. Which broker do you use for volatility? Please, ni moja tu, Delive. Na mwache kudanganywa ati Delive wanafunga, sijui wanafunga soko, sijui wanafanya nini. That's a lie. Delive waendi mahali. Delive are not going anywhere. Don't get lied to. So that what we are covering up today is a double bottom. Double top we covered up. I just needed to refresh that because that was our last lesson. So what we are covering today, we're gonna cover a double bottom. A double bottom is the opposite of a double top, yeah? It's very, very opposite, yeah, double top. Now this one, the other one was forming on the resistance. A double bottom, let me face the camera ahead. A double bottom is formed on the lower side of the market. A double bottom is formed on the lower side of the market, on the support. It's formed on the, and let me not do that. It's formed on the support. Now it's the opposite of the double top. Yeah? The other one was being formed on the upper side. This one is formed on the lower side, yeah, of the market. If you want to run your content, please continue motivating us. Yes, Asante, thank you. Shaba, thank you. Let's continue. So if we said this one is called the neckline, the position which the market bounced back to the support, yeah. So when it formed like that, then goes up. I just want to draw all of them so that I can explain vizuri. I just want to draw all of them. Does a retest, then goes back up. Then the third one, it does the same thing. So you have to know what are you trading? What are the tricks? Because trading is not just trading. You know, people just don't know the secret of trading. And then number indicators, which line, the indicators are bullshit. And I tell that one to everyone who trade indicators. Those are bullshit. Know how to read the market, know how to understand patterns, you'll be good. And that was a real half. A very good half. Like that, huh? So it's the same as a double top, but now this one is inverted. This is on the support side. The one we had, a double top, is formed on the resistance. This one is formed on the support. So it's simple. It's simple like the other one. You buy it at this position. You buy it at this position. You buy it at this position. Mwalo, I had switched off my phone. I'm switching it by tomorrow. Try to call me tomorrow. I'll be on. My phone will be on from tomorrow. Nimekuwa off. Nimekuwa nikitafuta dona. I've really made a lot of money. Later times na make pesa mingi sitakangi kusumbuliwa. So I usually switch off my phone. But from tomorrow it will be on. I promise. I will switch it on by tomorrow. TP. Let me just draw this one. You say this one. You buy it here. You buy it here. Now you note the difference now. By TP, wherever it originated from. It originated, it got ilikuwa imetoka hapa. So this market has to get up to here. So the TP is supposed to be at this area. This one, let's say you uangukia, because you get lucky. You can buy it here. Maybe when it breaks, it can break. You can buy it up to here. It usually have 2 positions, but you will check. If it doesn't do a retest, just know it's gonna get up to halfway, and then and still buy it at this position to give you 2 entry position. Yeah? 2 entry position to give you this position and this position. Take profit as usual. This area where the market originated from. TP there. So I want to explain it from the beginning, from here. Enter entry analysis ni kwa time frame gani. It will depend on the time frame you have seen the double top. Now, kidogo tu, just say I'll answer that in a few. Yeah? I'll answer that in a few. So this is what I mean. Double bottom, it's a market which has gotten to the support, but this area, this is our first point. Now the market was dropping. It went up. It was unable to break. We have called this place the neckline. Where the market bounced back, it was unable to go up past there. We call that area the neckline. The market dropped back to our support, which it was previously unable to break. It is unable to break again. Okay? So the first trade you take when you find these 2 positions, when you do your analysis, you're gonna get to analysis, drawing analysis and everything. Yeah. So when you get to the market and you see the market has 2 positions, it's unable to break this area and this area. It has formed reversal candlesticks. You usually buy it from here and then take profit. You take it on the neckline or around here. Before you get to the neckline, the decision is yours. Now, what you usually do, you wait for the market to break on the upper side. Do not stay with that trade, because what trade does make a mistake of staying is this one. Let me show you. Let me show. The mistake traders make. They are unable to. They do not leave a trade. So the market goes up. It gets up to a neckline. It gets up to a neckline. Sawa. When it gets up to a neckline, the market can go down and form something called a bearish flag and continue going down because it originated. That pattern I will explain it later. But the main reason for you to step out of that trade, because it can do something like this. It can get up to the neckline and then go back down to our trade. So it's very, very important. You buy from this area, get out on this area. You have to get out there. Get out. When the market get to this area, get out. So, get out of that trade. Second, let me go. When the market breaks on the upper side, this is what you usually do. You wait for it to do a retest. You wait for the market to do a retest so that you can buy. But sometimes, ukijisikia sana, if it breaks and you see like it has broken that area and you're like, let it be. You can, when it breaks this area, you can enter the trade. If the candlestick is not that big, you can enter the trade. I will give an example how. Or you can wait for it to do a retest, then the market goes back up. Another one, I've said, if the market doesn't do a retest, mostly it gets to halfway. So, it gets to halfway. Then goes back down to do a retest, then goes back up. I've shown this example with step index. Step index had a double top. It had a double top. It didn't do a retest. You can watch, but the candlestick can really break neckline yet. Let me show you where the neckline was, because the neckline was here. You see, if you ever find the market has broken with this small candlestick, you see our neckline was here at the center, but the market will break now with a very tiny candlestick. You can place your trade there. I don't think you really need to wait for a retest. You can trade it there. Giamini. So because they didn't do a retest, they went back up again to do a retest, then went down. I'm looking for a market which I do not have a market which has a yes, I have a market which has double bottom. Let me show you. All pairs with GPY, and I said this today. Gold controls GPY. If gold loses strength, gold loses strength heavy. If gold loses strength, all young pairs, because China, Japan, they bank their currency with gold. So the moment gold loses strength, their currency usually lose strength. Okay, so I had a very perfect double bottom. Yes, we do have a double bottom, but here ilikuwa sketchy. I trade data sides jioni, because that's what made me nitoke hiyo trader. So I want to explain this. We had a double bottom. You can see a double bottom. Our double bottom originated on this area. Is it even that area? No, we do not have we have another high. But let's take this side. Let's take this one, which is closer. Our market had a double. You can see the market didn't break. I say weak is not a breakout, but they're in the same level. If it was a body, you couldn't have called it a double bottom or a double bottom. It originated from this area. They have already broken the neckline area. The neckline area, and be very, very careful because these people are cocky, was this area. But they did break. But what did they do? They went back down. That one I can explain why. Let me see on daytime frame. Yes, on daytime frame they didn't break. On daytime frame they didn't break. So trading this market with daytime frame was way safer for any trader. Double bottom, our neckline is this one. If this market breaks here, we are coming up to here, because this is a double bottom. And nasema hivi, you buy it from here, take profit on the neckline, then you leave, because the market can do this. I do not know if you're getting me. This is a double bottom. This is our double bottom. Our neckline is here because you can see the market went down. Let me use something smaller. The market went down, went up to this area. This is our neckline. Then went back down to this area. Sana ni wana request a join video. Ufanya nini sasa karaoke? Can you delete that request? So our double bottom is this and this. So it got up to here. That's what I'm telling you. When you buy from this area up to here, leave the trade, because the market can go back down. Come on, up to there. So that's how a double bottom look like. I want to look for, do you ever consider a stop loss? Now let me explain that one to, let me go back to my chart. I explain now how I consider a stop loss, right? This is how you do it. Let's say I have bought my market here. Yes, in my press buy, on a double bottom. If the market breaks my support like that, I'm gonna step off that trade. I'm gonna close this trade, and then I'm gonna enter a sell, and then I'm gonna measure this area, and I will trade it as something we call a bearish flag. If my support is broken, I'll step out. So the person who have asked me about a stop loss, if the market doesn't go up, I will place my trade here, because you're buying now in a kwa imeweza. I would place I won't place any stop loss, because the market can come down, nice break, you just leave weeks and then go. Me, I like seeing for myself, like, this market has broken the support, and I can confirm myself, and then I step out, and then I place another trade for a sell. It's gonna give me a sell now. So it can give you two options. If it breaks my support, this one, I'm going to sell it as a bearish flag. And I've said this. These are the support, the market usually goes. Even there is another trade which is almost, where is Chef JPY? Very good. It has a very good example. We had a double bottom here. The market is supposed to go back to wherever it originated from. I think hata imefika. Yeah. I think it's already there. Look. We have this double bottom. Our market was here. Let me look with daytime frame. It really had a lot of manipulation around this area because they knew a lot of people are going to take a buy. That's why most say don't usually use a stop loss kwa sababu juu ya hivi. A lot of manipulation, they fully knew the market was supposed to come to this area. Ona. Wao ukiona account yako, unajua kutalingana na account yako venye iko. So, mimi nikibreak, unaona venye ilienda juu. Nikachukua buy. They went down. Mostly, I will step out. Kwa sababu, I do not know if they have decided to go down, but the market decided then to go back up. Then you take your buy around here. Because most of the time, I will do a buy along this area. When they do a retest, I've said any market broken must be retested. So when they come to do a retest, mostly I'll take my buy here. But look what they did. And this happened. See, lazima ati perfect trades zikwe what your intake on fake breakouts. So you just receive them as they are now. You can't do anything at what you take. Zinaumishanga mtu nje. Sometimes you're gonna lose because of those fake breakout, especially volatility. Volatility has a lot of those fake breakouts. A lot of them, yeah? It has a lot of them. What's the time? Oh, it's 30. So I think I will cover one more pattern. Because double bottom and double top are one and the same thing. So I'm gonna cover a pattern called bearish flag. Bearish flag and bullish flag, okay? So I've said if you don't have boom 1,000, that is a free, hizo ni pesa za bure. Haya, that is free cash, free money. This is free. Hey, anyway, let me go on. I think I've already answered about the stop loss. Which other question? Let me go to the next pattern. The next pattern we're going to cover on is called a bullish and bearish wedge. I think the better nikimaliza hizi any pattern haraka. Bullish and bearish wedge. I want to draw them so that you can see, yeah? So, a bullish and bearish wedge. So, a bullish, we said bullish. Bullish in market, yeah? Buy. Nimeandikia watu hapa. Market bullish, we say bullish. We usually mean buy. Okay? Usually mean buy. So, up to there. Bullish usually mean a buy. So, bullish usually mean a buy. Bearish usually mean a sell. Tukai kitu ije kwa screen. Bullish usually mean a buy. Bearish market usually mean a sell. Bearish usually mean a sell. Bearish market will usually mean a sell. Bullish market is a buy. Bearish market is a sell. So what we are covering today, we are covering something called a bearish, bullish and bearish flag. Our market was going up. And then ikaform kitu inakaa hivi. So in one drawing, draw. This one is the first one you're starting with. Let me write it even. Let me just finish drawing. So, this is called a bullish. The market was going up. Then it got to a certain position. It started consolidating. Consolidating ni kama inainama, like it's going down now. Then, if the market originated on the lower side, and get this one from me, if the market originated from the lower side and went to a certain level and consolidated, because it doesn't have to be like this, sometimes it can be like this, still this one we're gonna call it a bullish flag. Bullish, it's a buy market, and then consolidated on now a straight one. It doesn't have to be curved on the side. I'm just giving an example. Now, consolidated on something like that. Now, if the market formed any of this, and you see any of this, if the market originated on the lower side, and it was going up 99.9%, and I repeat, that market will continue to go up. If the market originated from the lower side, went just consolidated, if it breaks, usually measure, usually measure this distance from here up to here. You measure it like that. That is the level. Oh, just need to move it. How do you move this one? Oh. I'm unable to move the whole thing. How do you do it? I think it's on kwa nini. I don't know kwa nini inanisumbua. Let me show you how the one I'm going to use so that it can be easier. Let me show you. No, I'm not erasing anything. I want a pen. Usually measure the market from here up to here. Okay? We call this one distant X. We call it distant X from here up to here. When the market breaks on the upper side, because it's gonna break on the upper side, it usually goes the distance X, this one. Now the trade you're gonna place your buy here. Buy will be on this area. Take profit will be the distance of this. I repeat again, the distance of this distant X, where the market started consolidating. You see the distance which the market started consolidating, this area. Distant X. That is the one we measure from here, where it started consolidating, up to here. Distant X. And the market is going to go up. And I've said this, and I've said it again. If the market originated on the lower side, it was going up, and it consolidates 99.9% is going to continue to go up. Consolidations inakupeanga entry. They give you entry of the market. When the market breaks on the upper side, it's gonna go the distance X, this one. The same with this one. The market originated on the lower side, then consolidated on something straight, yeah? As much as this one look like a double top, yes? I've said this one look like a double top. The market can reach here, then go up. So when it breaks, you measure distant X. This distant X is a market where it's gonna head to. So you measure this, and I repeat. Let me just redo it because from some people to maybe to understand. Let me do it. Our market distant X. When the market breaks the upper side, and I've said this, our market originated on the lower side. So definitely 99% be mentally prepared. The market is going to break on the upper side. So, and I've said this, you measure distant X, that is the distance the market is going to go. So you buy at this position, you wait for it to do a retest. You wait for it to do a retest. You wait for that market to do a retest. When it does a retest, you buy from this position. You take profit where the distant X was. Now, to come on that happen. This is very key thing to know. So, these are very key things to know. When the market is done with distant X, now, this is another thing you really need to know. When the market is done going up distant X, it usually goes back down distant X. Get this one. And I'm going to show you right now. And I said this, a bullish flag is a buying market. So we are going up. Our market consolidated on a certain area. So you have the resistance and the support. I'm going to show you how to draw all those things. I no longer train, so I think I'm doing it for free, and I'm doing it. I'm going to do it very nicely. Wataki kubuy sig. Si kila time unabuy sig, no msi. Wajifunze uone kama unaweza trade venye na trade, but it really need a lot of practice and patience. So from the bullish, when the market ikiform from the lower side, it come and consolidate at a certain position. When it consolidates that certain position, I've said this, you measure distant X, you put it on the upper side. So when the market breaks, usually take a buy, and your take profit should be the length of the distant X, which I've already shown. Okay. When the market is done going up to distant X, it usually goes back down. Inakupeanga buy, it gives you a buy for distant X, and still when the distant X is done, the market usually goes back down. Let me show you. Let me show you a very perfect example. Where is V25? V25 did exactly that. That's why I had given it a sell, because the market usually goes back down distant X. Where's V25? What? A minute. I'm showing you right now. We had a perfect bullish flag. Nataka kuonyesha size. We had a very perfect bullish flag. So that what was done in stories za hekaya na peana hapa. Si stories za hekaya. Our market originated on the lower side, formed a bullish flag. Let me hold my phone vizuri. Haya, this distance is distant X. The market, this is distant X, the whole box. See it hapa? And people will start measuring. I've said this distance. They did a retest, as you can see. Is it even clear? Let me add right to my phone. Is it clear? Our market had a bullish flag. I have done this so that people can understand. It originated from the lower side, came and formed this area. A bullish flag, right? When it formed a bullish flag, the market was supposed to go that distance on the upper side. Did they go? Did they go distant X? Now, after they went distant X, I want to show you something. They went distant X. Our market broke out this area. They did a retest. The market went distant X. After it's done with distant X, what did it do? Went back down distant X. Msema ni manini tunasonyanga. It went down distant X. That is a key thing to note. When the market went up, I'm showing a real market which is happening right now. Our market had a bullish flag. It broke on the upper side because it originated on the, let me see, it originated from the lower side. It went from the bullish flag. You measure distant X. When the market is done with distant X, the market went up distant X. This is what you buy. You wait for the market to do a retest, because sometimes it has to give you a trade. You wait for the market to do a retest, and then hold your trade. Don't have pressure. When the market was done with distant X, when it went up distant X and it was done, what did it do? It went back down distant X. Oh, what's the time? I have like less than 5 minutes ago. And that's all I'm covering today, and I think I'm done. So that's how you trade a bullish flag. A bullish flag, you measure distant X. Whenever the market breaks, the distant X usually goes back. The other market we have, let me give you another example, but this one is for a bearish flag, and I need to cover a bearish flag either by tomorrow. Wait. No, that one is a bearish flag. I need a bullish flag. I need a bullish flag. Do I have another bullish flag? Yes, I do. I do have a bullish flag in Forex. Which way was that? It was no live signal. And I've already given a trade. I've already told people. I've gotten to this level, and I told people to trade V70. Not V75. Boom. Let me show you the last one for a bullish flag right now, and then I'm done with the class, and I'm gone. I think that's enough. Forex, I told you, if someone sell you PDF, those are bullshit. Forex is about knowing patterns and knowing how to analyze the market. Forex hakunanga notes. I see people telling me, can you send me notes? I'm like, which notes? For what? For what exactly? To read what? Forex is about having a laptop, knowing how to analyze a market. You can look at a chart and know how to explain the chart from beginning and the end, and knowing how to read candlestick, knowing how to see our patterns. That is Forex. Forex hakunanga notes. Notes is when maybe you're being trained a double top, and those one are things I'm drawing right here, so you don't even really need a PDF or something. So let me show you a bullish flag, another bullish flag which is coming through, but I've gotten to that trade a little bit late. No, let me not say late. Although I'm in negative, which I'm okay with it. The market originated from the lower side, from the, you see, consolidation. I was supposed to take my buy at this position. Sorry, let me show you. I was supposed to take my buy at this position, but I got in a bit late. But no worries. So what is going to happen is you measure distant X. This is, you measure distant X. But remember, this is a double bottom, so 100% that market should go up. You measure distant X. This one for Forex doesn't have arrows like for volatility. You measure distant X. This is a distance the market should go. And if I check visually, let me take it up to here. You can notice this area. You see? You can notice that area. It's our distant X isn't in this area, so I rather take it at distant X rather than here. I'm okay taking. So our market originated from the lower side, from into my trade was supposed to be here, but I took it after. No worries, but it's supposed to come up to here. So, and that's it. That's how easy it is to trade. No wonder I do not usually, and when we talk about this, I'm not talking about 15 minutes. I'm not talking about 1 hour. I'm talking from 4 hours and above. For anyone learning, if you want accurate entry, because time frame which are below 4 hours have a lot of manipulation. They have a lot of fake breakouts, a lot of manipulation, a lot of candlesticks for reversal which are not there, they are not working. So I prefer when people use 4 hours and above. Trade after every 4 hours. You will get very good entries, and then you won't have zile wogaza with this market reverse going my way. No. So that's when people ask me, why do you trade without stop loss? Because I trade with reasons. Okay? For those who ask why I do not trade with stop loss, I trade with reasons. I do not just wake up and I decide this market I'm gonna buy, or this market I'm gonna sell. I consider a lot. I consider the patterns. If the pattern is there, if I'm trading a pattern, am I trading a double top? What am I looking at on that market? I trade with a reason. That's why I do not use a stop loss. And ukifika hapa wewe jua tu make it in forex. Hivyo tu. Kwa hivyo mahali stop loss haikusumbuangi kwa kichwa, no, you're doing great, but know how to calculate your risk. Same that you watch account blow, know how to calculate your risk vizuri sana, and that's it. So any other thing nafa ku address, VIP narudi from date 15. Nimepata hiyo swali maraka 20. VIP narudi date 15, and I'm convinced if I go for 1 month or I do for the 2 months I usually do. I'm not so sure about that. Yeah, 2 months didn't, but I think this time I'll go for 1 month because I want to have a target for every 1 month. I do for 1 month, and then I do an account of 150 USD. I will be trading an account for 150 USD. That's the account I'll be trading for from date 15, and then I see how I'm gonna do for a month instead of kufanya 2 months. 2 months, I think they are very. We have a target, so I think let me do this one from 1 month. I see how it is. If it don't favor us vizuri, not like favoring us, if I will see like to fanya tufunge trades alaka, because so many trades I've given mezipeana even before. I think I gave step index before Christmas and still in a run. So I will do for 1 month. This time I will do for 1 month. I'll do the VIP for 1 month. We see how much you're gonna do, because the market is doing fine. Market volatility iko sawa. For me, iko poa. Ya Forex iko perfect. I mean, sijai kuwa na mwezi poa kama hii ya Forex. The market for Forex is doing awesome. What else? And I'm gonna be giving trades for both. But another thing, I won't stop training still. Minimum capital ya kutrade na account ya. So wait for a drawdown. You know, it will depend. Mostly see capital, lot size. Use a small lot size. If you're usually scared of negative, use a small lot size. It helps a lot. Use a small lot size, it's gonna help you. But capital inaanza na nini? It's all about skills. First get the skills yourself, so that it can be way easier for you to trade. Get the right skills, know how to analyze the market. Remember, for Forex is from 12. The next 4 hours is usually at 4 in the morning. The next one is usually at 8. The next one is at 12. Yes, at 12. The other one is usually at 4. And we go then at 8 Gioni, and so on. So mostly consider getting the skills first. And we have a long way to go because we haven't even started on analysis. I'm just showing the basics. So for entry, I'm going to show you. For entry, when it comes to analyzing the market, hopefully before, I'm going to try as much as I can to make classes. I get done with pairs, but I'm glad to normalize double bottom na double top. And then nilikuwa nafanya address. Yes. Kitu ingine. Where do you trade volatility? We trade on Doudle. Doudle is the only broker we have. Doudle. But right now they are really giving someone issues with the verification. But if you use your KRA pin, you're gonna verify it very fast. KRA yenye iko renewed less than 6 months ago, ama ueditiwe hiyo KRA yako watumie for anyone who want verification ya Doudle, because they are giving people. Can I sell step index penye iko? Yo, unajua sijui juu nashinda imechezea kwa trade yetu, zinashuka inapanda inashuka inapanda. Ngeisali mchana. For now, hapana. Hiyo ni risky. Very risky. The only trade I've told people to enter, na imeanguka saizi, hata ni boom. Nikikuja kwa live video, iko profit ya 2,000. Trade unaweza ingia, mwenye ananiuliza, ni boom. Nyamboke, do you do? No, I do not do account management. Niliachanga kitambo. Stakani stress. Tabloya pesa za mtu akuroge. And you know the issue, the market which factor. when ananiuliza, just sell boom 1000. That's the only accurate trade I see which has an entry up to size. Yes. So another good volatility broker. There isn't. We do not have another broker. We usually have only volatility. Volatility, that's why we're marrying with. We usually have volatility. We do not have. We have only Delive, not volatility. We have Delive which offer volatility alone. I do not have any other broker. The other broker I know, nilisikia, I forgot the name. I will call someone and ask. I'm saying I think I has an idea of an account, yeah. And then I've said those rumors that they live in Afungo, it's a lie. There's someone who sent me a screenshot telling me that the people were saying they live in Afungo, they live ifungwi, my dear. They live ifungwi. Wacha nionyeshe before niende. You see how accurate I was saying. This market, this is V10. We originated from the lower side. The market consolidated. I want us to measure distant X before I've got. It is a very accurate example. We measure distant X. Our market originated on the lower side. We measured distant X. The market went up. Did it go distant X? It did. After it was done with distant X, it went back down. So I'm saying this. It's about knowing the small details in Forex. Learn day in, day out. It's the small details which matter. It's the one which will make me hold a trade and I'm like, I'll check it too negative. Like the way V75 said on negative for, I think, days. And then right now it's in a very good profit because it had a bearish flag. We're going to cover a bearish flag tomorrow. And then we're going to cover, yes, tomorrow we're going to cover bearish flag. And bullish wedge and bearish wedge. Those are the three patterns we're going to cover tomorrow. Tomorrow is on Friday. Yes, I'm going to confirm if I'll be around. Yeah, Friday is tricky. But I will confirm. I will confirm because I do not want to say. Nimechoka na sherehe mimi. I think I've earned a lot and then I've been partying a lot. So I really wish my voice can go to normal. So for now, that's it. I think I need to go. Share, like, comment anything you want me to cover. Anything else. Before nimalize. Ama if there's anything nimefunza and you haven't ujaelewa, telling me to explain it again because I had to do a double top. There's someone who told me to repeat. I just go through it and it's easy. It's as easy as ABCD. So offer lessons are Friday najua akili iko kwa sherehe bado. Friday me I do not know kan nitakuwa kwa nyumba. Issue si mimi. Kupatikana inaweza patikana but accuracy yangu yani mimi kuwa kwa nyumba Friday that is the problem. The problem is usually on being in the house on Friday. But I'll try. Napenda kwenda kucheza pool. I'm a pool addict. I like going playing pool. So unajua kucheza pool ni yote tucheze. But si ya pesa. So, but anyway, have a lovely night. Like, and tagging me watu wenye mnataka wa learn Forex. This is what you guys are paying 70,000, 60,000. Kuna mwingine niliona anafunza na Forex for 2 weeks. And I was like, analipisha 60. Stataja ni msichana. Nimeona TikTok. Analipisha 60,000. And juni $40. And 400 USD. 400 USD, that is about 60k and something, yeah? 60,000 shillings for 2 weeks. What are you going to get within 2 weeks? That's a lie. If any trainer tell you they're going to train you below 1 month, and someone is doing classes for 10 days, my friend, what are you going to learn? No, you have to digest patterns, vizuri. And then, that's why I was telling people, me I used to train for 2 months. 2 good months. The first 1 month, we train someone basics. They digest the basics. The next 1 month, you're completely with that person, drawing charts, doing analysis, Now, what are you training people for 2 weeks? Na mi mtu asinikoti. Nikuuliza tu nauliza watu wa. Do you know most of you are here? What are you training people for 2 weeks? 10 days, what are you training someone? Because a lot of work will come when I start doing analysis. Saizi hata sina kazi. When I start doing analysis, that is where the hard work comes in. To explain to people, this is how you draw, this is what to do. Because doing candlestick, and I saw them, they are being given certificate for anyway, it is what it is. Acha niende you staki watu anza kulipa to the watchdog anianike tena nianauliza ni soda na kunywa. But this year I don't care. Hata mnaweza nilipia sasa edka hii mwaka by this tuki hata nijipate tu kwa nikitrend huko Madam Forex did, as long as nilisema hivi, as long as nudes zangu yamko. So let me go. Nisifanye hii video kwa mrefu. I think nimejibu kila swali. Have a lovely night. Kuna kitu from UK. I think that's it. That's it. If I'll be available tomorrow, I'll update. The next one I've said we are doing bearish flag and wedge. We're doing wedge. We're doing bullish and bearish wedge and a bearish flag. A bearish flag is the opposite of a bullish flag. It's one and the same thing. But now this one is originating on, bearish is originating on the upper side, consolidating. It's one and the same thing. But I will do it tomorrow. So have a lovely night. We'll see you probably, let me say tomorrow. It will depend on how my schedule will be. And take care. Bye.